Lambo's first in line. I mean, your guess is as good as mine. We're up about 30 bucks last couple of days, something like that. Where are we at here? We're at 570 to 596. I mean 567. We're up 29 bucks, yeah, we're up, but that doesn't mean jump in front of the train. I jumped in front of the train. It's obviously not working, uh but see, I was just gonna say the exact opposite of that. It's a bull market. Who cares about being short? Like you'll make so much more money long that like I just don't even like I said I did. I jumped in front of the train. I'm still holding some puts that are deep red from yesterday. Got some time on them, because technically, yeah, we should have a pullback, but I've also been trading long nonstop for the last 2 days on anything, chuck a dart and everything is ripping. It's a bull market, but and it's trading psych night. So no better way to look at it. If you look at this and think only about the shorts, then you're missing the whole like picture right here. I'm not saying like, dive in long tomorrow. In fact, almost the opposite, but like look, and this is the weekly chart. I mean, if you really want to see like, if you want to see the movement, look at this move up. I mean, has there been times to capitalize? For sure, without a doubt. Some of them we couldn't have known, carry trade unwinding, some of those we couldn't have known. This was some inflation stuff that went on, but you know, we're it's been a dip buyer's market for, we've been bottomed for over 2 years now, and we've been in a bull market for a year and a half. So, it's all about just riding the wave, trade with the chart. I knew that I was going to be trading, because I even told some of my friends starting last week that this is a time to, this is a time where the market is going to make gigantic moves. You want to be involved in the market, And so the reason that I had those puts is that I knew that I was going to be trading long, and looking only long and trading only long. So you slap those puts on there as protection. If they go to zero, then that's probably really good, and it means you've been printing on the longs. Or if you miss on the longs and you do get a pullback, you got that put to protect you. So that's what I want, And so that's the only reason I trade. I'm like, I don't really remember the last time I took a a put for a trade. I know I did during Mastermind. That's really the last time I remember taking shorts for an actual trade. Um, Anything beyond protection for me for the last 2 years has been useless. Welcome everybody. How we doing? Hope everybody's had a great day, great couple of days, man. The market has just been generous these last last years, but God, this last couple of weeks has just been, the moves have been too dang good. It's been fun enjoying it. Oh yeah, there you go. Lambos tried the short. Yep. And that's it. That's it. Bull market. You're gonna get torched trying to be short. Don't get me wrong, I'm not saying just buy calls on every candle, but you wanna time your entries as best you can. But short, and it's been a death wish for a while. Oh, you swung the 595s. For 11.15. Hey, at least you got a little bit of time. That's not a horrible trade by any means. But my friends are asking me what I think is going to happen, and I said at least, they were asking me yesterday. I said, yeah, at least a little bit more up, then some down, then some more up. So we should. I am. I think most people who really study the market, all of us are in dip buy mode, hoping a dip comes to buy it. But that's about it. Yeah, Lambos. Just, It's been a hilarious market to just, buy some calls and fall asleep and wake up 2 hours later. 700 by Thanksgiving. SK, how we doing? Welcome, welcome everybody. We'll give it a few more minutes, see if a couple more people are going to join us. And tonight's going to be a lot of discussion. I of course, always try to wrap uh trading psychology back into the charts. You have to, trading psychology is great. And people have asked me a lot about it, and I've of course read, a decent amount of trading psychology books. The ones everybody likes. And they just really aren't for me because, you know, at least in my experience, like the trading psychology that people struggle with, it's super easy to make a trade plan. It's super easy to make rules and things like that. And it's generally easy to follow them. But it's when you forget to apply them to the chart, how can you take these good ideas and these good rules and these things that you have and actually apply them to the chart and start to follow your rules? And we're going to use, because I've been alerting a bunch of trades in masterminds, so we're going to use even a couple of my trades as an example of where, one outcome happened and it sucked, but you just have to follow your rules and you have to do what you say you're going to do. And that's, and then sometimes it hurts and sometimes it doesn't, and that's just what we have to do as traders, is really try to control our mind. Everybody's heard me say it a million times that trading, super, super easy. Trading psychology and the mental side of trading is definitely the difficult part of it. I mean, market's pretty dang easy. If it's pointed up and to the right, you probably want to be long with time. If it's pointed down and to the right, you probably want to be short with time. I know that's you know, uh I know that's oversimplified, but that's really, that's how you have to trade the market. You want to trade with the market. I say it all the time, a bunch of us say it all the time. You don't want the whole trade. Like I don't care if you longed at 567.89. Like I don't care if you got long there. Like good for you, but I don't know if it was a good entry or not. Who knows at the time, maybe it was a great entry, but I don't care if you longed there because you are fighting the market. I want you to be taking entries that make sense, and you won't bottom tick. There's a really good trader, and he said, in your entire trading career, you will bottom tick once or twice because you'll always outdo it, So that's all you get. You get your one bottom tick, you get your one top tick. That's all you ever get because one will always be better than the other. It's not something you should go looking for. You should look for, you just want the middle. We can even just go to this day. Like, don't buy calls, don't buy calls, don't buy calls, nowhere here. Then you see finally an exhaustion candle, then you see a big old buy and you see strong buyer volume come in. Well, now you can start to think about longs. If you can get some sort of reasonable entry, you can start to think about them, but don't just be hammering calls because the market's dumping, and don't just be hammering puts because the market's ripping. That's all we can do. Okay, let me make one more thing. Oh, Lambos, we're gonna, I love that question. We're gonna kind of touch on that a little bit later, but if I seem like I'm forgetting to talk about it, make sure you bring it up again. Um, okay. Yeah, drink water. Okay, so welcome, welcome everybody. Happy to have you here, Dirty River. Tonight we are gonna kind of be talking a lot of things. We're of course always gonna get back to charts like we always do, but tonight I would love it if we could have a nice discussion. I know that we've had, and I kind of mentioned in my post about this, we've had a bunch of craziness in the market. Been a really awesome market for the last, week and a half or so if you were on the right side of it, and a really, really tough market if you were on the wrong side of it. And we were all at some point in the last week on the right or wrong side of a trade. Just when you have this amount of volatility in the market, everybody's going to be right or wrong sometimes. I've been doing, for anybody who doesn't know, I do the pro voice chat 5 days a week over there. So we've been trading a lot in there, and we've stopped out of trades. We've hit it. We've thankfully hit a lot of nice winners, but I think since pro started here about 3 weeks ago, we've had a solid 7 stop outs, 6 stop outs, something like that. That's just, it's part of trading. If you're going to be actively trading in the market, you got to be prepared for stop outs. And so in a market like this, where we have just had insanity going on, not only do we have a really big election, we had FOMC today, we've had gigantic tech earnings, we've got a whole bunch more of the S&P reporting this week. So there's really a lot of push and pull on the market. And I know that this is a time where people can tend to get ahead of themselves. Either they're doing really good, so all of a sudden they're heavy. If the person's in here, I apologize if I'm talking bad about you, but man, there's a person in GameStab that obviously just went all in with like 50, 60 racks and hit a really nice win, and they're up really big. Well, it might not work again tomorrow. So this is a time for all traders in the market to really take a step back. And I have some friends I talked to a bunch in a group chat, and they're all good traders. Love talking to them all. And a couple of them are actually recommending, don't trade for this next couple of weeks. That's what they said at the beginning of last week. And, I joked with them, made memes about them, but I understand that logic of, there is going to be volatility, and if you aren't comfortable in the market with that kind of volatility and potentially seeing, I've even had to give the disclaimers in my voice chats lately. Normally I run tight stops, 10, 15% stops, as best I can. I've made it very clear in the voice chats that I run that, I'm sizing down, I'm widening the stop, and because I know the market is full of these ups and downs and wicks, and you want to be able to be prepared for volatility without leaving yourself super exposed. And so we're going to get into kind of all of that later. But I want this to really be a good, hopefully, group discussion. I know that a lot of things have gone on, and I know that people probably have a lot of questions, of what do things mean in the market? What did we hear in the meetings lately? What has the data told us? And of course, we want to keep this civil, but we have to talk elections, of course, and I'm sure people have questions about, elections. And then we'll wrap it all into trading psychology, because all of this is such a big part of it. And, having something that I always try to teach people is, you don't have to go study the Fed. You don't have to understand what every little, box on the dot plot means. You don't need to understand any of that. But you need to have, if you want to be, a relatively consistently good trader, find yourself in the right sectors that you should be trading, like if banks are ripping, you want to be aware that banks are ripping and maybe trade the things that are affected by that, like banks or SPY or things like that. So as traders, we need to just have a little bit of understanding. And so that's what I'm hoping we can do tonight. It'll be kind of Q&A format, or I can just talk, but hopefully answer some of all of your questions, because a lot of people don't know what to expect from the market. And so I want to, I don't know everything. Like I said, I'm wrong plenty, I'm right plenty too. And so if anybody has questions, let's get to them. I'll answer them to the best of my ability. Of course, I can be wrong. Some of the answers that I give will be, likely opinion based, but that's because that's how the answer might have to be to your question. But so I'm going to start with FOMC just because that's what we had today. Yeah, yeah. And also, if that person is in here, congratulations. So what a day, but maybe don't do that again tomorrow. But so we're gonna start with FOMC today. Obviously, that's what we had. Give me just 1 second. Obviously, that's what we had today. For anybody who doesn't know what FOMC is, even, it's the Federal Reserve. They're basically the Bank for America, and it's a group of people that make the decisions of what the Fed is going to do regarding monetary policy. And it's a bunch of fancy words for saying how much money are they going to charge people to borrow money is really what it all boils down to. And so we've seen in the market, over the last, in 2022, we saw for the first time, basically since 2009, rates really starting to go up. They attempted to raise rates in 2018. didn't go as planned, and cut them again. And then obviously, as you know, COVID played out and everything like that, somebody had to bite the bullet. And the people who chose to bite the bullet were Powell and Biden. You know, they said they decided that they were going to finally deal with the black cloud that was a very potentially large spike in inflation, which, as we saw, you know, there had been basically no inflation for 10 years. Prices hardly went up. And so they decided to raise rates and fight inflation, you know, and let the inflation finally catch up to where it needed to be, and then hopefully bring it back. You know, the Fed's two main focuses are employment and consistent pricing. So that's dealing with inflation. And so today we had the Fed cutting rates again. Second cut, they cut you know, a month and a half, 2 months ago, whatever it was. And you've probably heard people say it was a big cut. And they cut 50 basis points. Basis points last time kind of confuses people. All that means is, you know, 0.5%. That's what 50 basis points is. So, you know, the Fed's fund rate was at 525 and they cut by 5 and brought it down to 475. They always list it as a range. But so what does that mean? And how does that affect the market? Well, it is, you have to look at companies, and what it means is that, you know, if you're a small company, then, and you likely have debt and you likely need to borrow money for that to work. And so, you know, if you want to keep your company afloat, that is. So when rates are really high, it's, you know, when you hear people, you know, or the Fed, or you hear people say that, you know, it's tight, you know, monetary policy is tight, that means that people don't want to borrow money because the margins are pretty tight. Like you know, say you borrow 10 grand, but you're only going to make maybe $1,000 profit. Well, if you got a 5% rate versus a 2% rate, it's a pretty good chunk of your profits. So when we have that restrictive monetary policy going on, what that means is basically people aren't borrowing money. So now we are seeing those rates come down. So more and more people will be looking to borrow money. A lot of people heard me today. I was talking about IWM a bunch because it is small caps. And what are small caps? They're small companies that need money, and they tend to do very well in low rate environments. They tend to do very, very poorly in high rate environments. And so that's what we saw in IWM. And we can actually pull up the chart just to look at it and get a little bit of an idea. And we'll get rid of, I trade IWM pretty frequently. So if we zoom out and look, and this is the weekly chart. So, you know, back here, this is obviously the beginning of 2022, which is when the rate increase cycle began. Well, small caps got obliterated. I mean, if we really zoom out, they were absolutely smoked from all-time highs. You know, we had a decrease of, I mean, 40%, 35% there. And then they did, well, you know, these are big bounces, don't get me wrong, but they did absolutely nothing for the better part of 2 years. And so this was, you know, in 2023, as, you know, end of 2022 came and they basically said, okay, we're pretty done raising rates. You know, we feel good where we are. And so again, they started getting smoked, still started getting smoked. We had the bank issues, which again affects small caps. And so, you know, around here is when the Fed finally says rate cuts. They don't say when they're going to cut them, but they are finally saying that they're going to come. So as we can see with small caps, that was the boost they needed. Me and Tilio talked about this a lot as this was going on, that they were jumping the gun on it. And, you know, ultimately, if you caught that run, awesome, you know, 40-point rip or huge percentage gain on IWM. But they eventually went sideways for months and months and months. And now we start to see rate cuts, and rate cuts becoming a reality, and a rate cut actually happening and really pushing the market. And now again, this week, we have multiple things really pushing the small caps. We have an administration coming in that is likely going to be pretty, depending how everything plays out, could be pretty good for the small cap companies. You know, these are obviously still big businesses, but the next administration is, at least historically, very anti high rates. So while that's an extreme double-edged sword to cut rates too fast, if that is what ends up happening, the small caps have a very, very good chance at outperforming, both the S&P and the tech index, which at this point they are doing very, very well. They're up. I mean, from these lows, they're up pushing 50%. So amazing recovery on small caps so far, but that's the type of thing we are listening to from the Fed. While over the last couple of years, we've had some FOMC meetings that caused very, very dramatic moves on SPY and QQQ and all of that, more of it was because there was so much uncertainty. How high are rates going to go? How long are they going to pause? Are they going to cut? Are they going to hike? What are they going to do? So all of that uncertainty really added to, the craziness that we saw in the S&P and SPY and everything like that. And so today for me, I was looking, I wanted to be trading IWM. I had a feeling that we would be seeing some very nice moves both up and down. And so this is really where I focused in the market today. Obviously SPY put in nice grind up move early, but then around FOMC time, not a whole bunch of reaction. And then we ultimately get, a dollar pop off of it that is sold into close and ends us up right around where we were before the meeting started. So that's why I was focused on IWM today. I expected more volatility. Thankfully, I was rewarded with, some bigger moves, some flushes around, there was trades to be had here. So this is what I focused on going into that meeting because that's what, these are the companies that are going to be affected by what the Fed has to say. And so I wanted to be trading in those. So that's everything, you don't need to know much about what the Fed says. Obviously, when, I listen, when you're trading this, you should be listening to him because you're really able to trade off of what he says. I don't want to say don't be looking at a chart, but charts are a lot less important once the Q&A portion of Pal Talking starts because, all depending on how he answers questions, the market can really, really react to it. Today was a day where everybody, even, the bond market, everybody, everything in the market had priced in a 25 BPS cut. So today when they cut 25 BPS, it wasn't a shock to anybody. Obviously, this is when that report was released. This was the one volatile candle. I actually was lucky enough to catch this nice little pop here, and then sold off, and I caught a couple more of these pops. Did get torched somewhere right around here. We'll talk about that one during trading psych time. And that's what I traded today. Powell, he had nothing super interesting to say. Really the only concerns that I heard out of Powell is we definitely have some new inflation scares to the market just because of the next administration that's coming in. Trump has a very, very different view of monetary and fiscal policy. And so some of his ideas can definitely, increase inflation pressure on us in a pretty serious way. So that was really the only thing that Powell had to say. He didn't sound overly concerned. He said he felt nice and confident of it in the economy, as he's said, and he has been correct for years now. And labor market, little bit of cooling, which they've wanted. The only times that they're really going to start speeding up those cuts is if, potentially that labor market maybe cools too fast, anything like that. That's when they can maybe consider doing a sped up cut. Then going into next year, and I think we're sitting about 4.5% over the next year. They're saying 75 basis points in cuts. So it'll get us down well into that 3% rate, which would be very, very good. That would definitely stimulate the economy a little bit. That is one of the interesting balancing acts that is going on right now, is that when the Fed cuts rates, people borrow more money, which is a form of stimulus, which we have to be very, very careful how much we stimulate the economy right now because it is already really strong. We're seeing, big spending everywhere, from the consumers all the way to big businesses. People, even though in the polls they say they don't feel comfortable, people very, very, very obviously feel comfortable spending. We can see it in the data. So people are going to continue to spend, but we need to keep that spending a little bit under control so we can keep supply issues under control so that we don't where you already have other inflation pressures, big spending can be another inflation pressure. And then the other thing that the other thing Powell talked about that he did, I don't want to say sound concerned about, but is definitely on the Fed's radar is the national debt. The national debt is getting pretty out of hand. Without getting too technical, we're seeing a really big move in the long term, the long term bonds, your 30 years, your 10 years, your 20 years. We're seeing a big move up in those. And again, without getting too deep into it, when the long end bonds really increase in value or their rate increases, then that can kind of negate some of the rate cuts that the Fed is doing. So they definitely do want to kind of get those bond prices more under control to really keep us out of any sort of liquidity credit issues in America. So that's it on the FOMC. Any questions? I know we probably talked about it more than we needed to, but just to really break it down, listen to Powell. Does he sound upbeat? Is he answering the questions in a positive light? And you will find yourself trading much, much better on those FOMC days. And focus on the sectors that'll be affected. I'm sure XLF put in a nice move. I didn't look at it, but XLF, IWM, focus on those things when they're around. Then if we're getting inflation data, maybe focus on things, your Walmarts, your things that do a lot of importing. So that's FOMC. Any questions? Viral, ask that one in a little bit. Yeah, I agree. I agree. As far as that gains goes, that's just my opinion. No, don't matter. Okay, so with that, I don't see any questions. So great, we're going to move on. New president, we're just going to touch on this one a little bit. Strictly talk about some of his policies, some of the effects that it might have on the market, and some things that we can watch. So he's really big on tariffs. We'll see how that plays out for us. Generally speaking, tariffs are passed on to consumers. So it's, tariffs are they're widely regarded as a tax on the consumer more than anything else. However, the size of some of the tariffs that are being proposed could absolutely affect some of the companies that we like to trade a lot. One of them that comes to mind is Amazon. Amazon will be heavily affected by tariffs. Their profits will likely be affected by tariffs because they sell a lot of Chinese products. And so we need to be aware of that. We also really need to be aware of, some of those, like your Walmarts, some of those shopping places, Targets, all of that. We need to watch for those if these tariffs come into play. Some of those things that are, pretty affected by inflation, pretty affected by tariffs. Those are some trades that we're likely really going to want to have our eyes on as the new administration comes into power. And so the other things that I am, considering, and at least trades that, maybe I've taken small positions in, but some other things that I'm considering are obviously going to be the energy trade. A lot of people, and my view, I think, is different than a lot of folks' view on this, but a lot of people are viewing, this is what is likely a very bullish setup for the XLE trade, the energy trade. I am on the other side. I'm definitely viewing it as the XLE trade is going to be a very, very easy short under this administration, just because they don't, you know, drill baby drill to me means an increase in supply. When supply goes up, prices go down. So to me, drill baby drill is very bearish for oil. And so I've actually taken, way out of the money long-term position short on XLE just because I want to play to my thesis. It might go up a bunch between now and then, but for me, I want to be short on XLE. Then the other thing that I like to point out, and a lot of people, they don't zoom out like super big picture, but a lot of people don't realize this because the oil trade has been, I don't want to say, and the energy trade has been for basically the last year and a half relatively stagnant. People don't really want to get in there. We did set those highs on XLE, but when you really, really look big picture, And this is going to sound crazy to a lot of people just due to the, specifically the tech moves that we've seen. The number one performing sector under our current administration has been energy, has been oil companies. The XLE sector is up 150% under our current administration. So has it been a laggard, for the last little bit? Absolutely. But it has been a absolute leader overall. When we come back and we start looking at, the tech trade, the tech sector's up 82% under them. So maybe even a little bit more. Let's check it out. 87%, we'll say. So still an amazing trade, but energy has performed extremely well under this administration. The next administration is all about, the supply from America, and that should theoretically really decrease our prices and really bring down the prices of barrels of oil. That's the thesis that I'm playing on it. So I'll be curious to see if I'm right. I think regardless, the XLE trade is one worth having your eyes on for basically the next 4 years. Obviously, big tech is another really great one to have your eyes on for the next 4 years. They aren't going anywhere. Most of these companies that are in there are, they're the greatest companies in the world. These runs, all of the runs that they've been on, have for the most part been justified and backed up by absolutely phenomenal earnings. Even we've seen some of them. Meta is one. Meta said that they're going to increase their revenue 33% year over year. We're talking a top 10 company on the planet is increasing their revenue 30% year over year, and the market sold on it, or, they sold Meta on it. So when people say Meta had bad earnings, you have to remember their bad earnings was them making, tens of billions of dollars and maybe $1 billion less than somebody thought. So these companies aren't going anywhere. The tech trade is going to remain strong. Obviously, there is the belief that the left is much more welcoming to big tech, but they perform very well under all administrations. It doesn't matter. So obviously we'll be sticking with that big tech trade. And then finally, the other one is those small caps to me, that IWM, even if you want to trade some of those, I very rarely trade the actual IWM stocks. We've talked about them in previous classes in here. It's just companies that I don't follow. I even brought up some of them and everyone made fun of me because I didn't know what they were. Apparently they are popular companies, but I didn't know about them. But I do think that, small cap ETF is going to provide a very, very good trade for us over the next couple of few years. Of course, this is barring any, wild economic things that happen. We don't know what the future holds. Doesn't matter who the administration is. You don't know what the future holds until it starts to happen. And so we will just have to see how everything plays out for us. I think that regardless, the market is going to be very, very good to trade over the next little bit, specifically into year end. And then, of course, we should have no lack of volatility going forward. So, no matter what, I'm excited for this next few years in the market. We'll see. And so that's all I got on that. Let's see. Any questions here? Buy sell indicator. I get asked that one to every class. Pinned in my tab. And it's the one that's labeled assassin buy versus sell. How simple do I keep my chart? Super simple. But I will say that I don't. I have other charts that have some indicators that I watch that I don't watch all the time so that I can glance at them and know they're there. But intraday, oh, and this is an indicator a buddy made for me. It's awesome. I like it. If anybody wants it, feel free to reach out. But so let's see. Here was my chart for today. And then I had for my indicators, I got 9, 20, 50 EMA, VWAP, and then this one's the hourly 20. And then these blue lines, these just mark the opening range. So for me, like, when I was trading today, then this is really what I'm looking at. So nice and simple, major levels, obviously I'm using fibs right now. You can use B bands, whatever it is, because we're up here at these new highs. So that's really all we got to work with. And then, buying your intraday supports, obviously some of those, there was definitely some scalps to be had on SPY off of these previous lows in the day, but I like keeping it simple. We're going to touch on that here as we get into trading psych. Ooh, how do I think it'll affect the real estate? So real estate's a really tricky one because uh, you know, new home sales continue to go up, where people are still buying houses no matter what. People will always continue to buy houses. I don't see a real estate crash coming like other people do. However, if we run into a very tricky rate situation, maybe they get cut too fast, or maybe we start to run into inflation again, then mortgage rates are high again. It's pretty common for after the first rate cut to see a big drop in mortgage rates and then see a spike in them. And then they typically start coming back down as we cut rates more and more. However, if things do get a little out of control, be ready for 10% mortgages and probably nobody buying houses. What would I recommend a full port? Nothing. Oh, we got old Norberto in here. Ninja, is that like ninja? Okay, so with that, no more questions. Again, hopefully I covered some of the basics on FOMC, the presidency, some things to watch for going forward. And so now we are going to get into what is really you know, it's one of my favorite things to talk about in trading. These are normally really popular classes. People all have an opinion on it. And I really encourage people to talk. Even if you just want to send it in, if you want to send it in the chat, great. Even if you want to get on the mic real quick and, ask specific questions or anything like that. Trading psychology is huge. Every single trader deals with it. When you talk to a brand new day trader that has been trading, how we doing, Ninja? Happy to have you. When you talk to a brand new day trader that has very little experience, doesn't know things, at all, they are struggling with trading psychology. Then you go listen to people who have been in the market for, 20, 30 years, and they will still be able to tell you about, trades that I knew I should get out and I didn't get out, trades I shouldn't have added to that I added to. Everybody at some point still struggles with trading psychology. Of course, the longer you trade, it gets to be a little bit easier to deal with. But I always encourage people to talk in here because, and in all of my classes, there's never a dumb question. I'm here for all of you. I want to answer any questions anybody might have. And if you are struggling with something, there's like a 99.99% chance that somebody else is struggling with the exact same thing that you are. And so that's how I normally like to start these is, just ask some people, list some things that, what are some things that you struggle with? I always end up kind of typing them down, just because everybody struggles with the same things. And then I do these trading psychologies, and I've been trying to do them once a month. If you guys like that, make sure you tell MMA or Tilio or whatever that you like the trading psychology classes. I've been trying to do them once a month as just a refresher. What are some things that everybody struggles with? How can we fix them? Those types of things. Just as an example, and of course, if you all want to start talking about some of the things you're struggling with, let's do it. But some of the big ones that people struggle with are obviously FOMO. They see a big green candle and they're like, I gotta get in this trade. I'm missing out on money. And they aren't. Everybody struggles with FOMO. Or maybe they see, and we see it all the time. We got a big strong push up. People see two red candles and they're like, okay, we're going back down. We're going to low of day. That is a huge issue with trading psychology because when we are trading, and everybody knows what I teach is, I don't care if you longed the bottom of this first candle of the day, and I don't care if you sold the top candle of today. None of that matters to me. A good trader wants this. They want the meat, They don't want a bottom tick. They don't want to be the first one in the trade. You guys will hear me say it all the time. I don't want to be the first one in the trade, and I don't want to be the last one in the trade. Obviously, does it result in me selling early? Blah blah blah. Yeah, but I don't care about that. If I dwelt on all of the money I leave on the table every day, I probably would hate trading. But it's just part of it. We need to catch the meat. That's all we care about. We want the middle of the trade. We don't care if it's the bottom. We don't care if it's the top. We just want to make a little bit of money in the middle. And how can we do that? What are some things that we can work on? And what I always try to bring trading psychology back to, and I think that it goes very, very hand in hand is technical analysis and trading psychology are two of like they are one in the same. Yeah. I wondered if you were gonna laugh at that, Lambeth. Trading psychology and technical analysis, they, you know, one is not one without the other. You need both. And so what do I mean by that? When I am entering any trade, a big part of my trading psychology, and I know that this is, this is, and I hope more people start thinking of it this way. When we as traders, we don't we don't want to only be thinking about the money. When I am entering a trade, my two main concerns are where do I want to enter and how much am I going to lose? Because that is what we care about. As traders, our number one job, even more than making money, is capital preservation. We want to be able to come back and fight the next day if we were wrong, and fight the next day if we were wrong. You don't want to, dump it all in one trade and decide trading's not for you. You want to always live to fight another day. So for me, the most important parts of trading psychology, and for me, how I control FOMO, how I control, any sort of chasing, any of that. If I don't know my entire trade plan before I enter a trade, and just quick disclaimer, I know that there's new people in here and you're learning. And you might not be able to identify all of these things. You might not be able to, you might not exactly know what an analyst is thinking. That's fine, but you need to start learning. Always be learning. So before I enter any trade, how I control FOMO, how I control chasing, how I control adding to losers, and what, averaging down, I call it adding to losers. How do I control all of that? Is by making a plan. So we can talk about SPY. I had a big level on SPY here. I had nothing. Obviously, this is the opening range, so this ended up being the low a day. I mean, I'm just going to remove that just for confusion's sake. This one right here, I'm just going to remove those ones so we don't even have to look at those. So we're coming into SPY trading. Coming into the day, SPY opens, we're getting some pops and some drops. Well, I'm not trading this right here. You can't buy calls, you're at resistance, and you can't buy puts, you're at support. You have all these EMAs, you got VWAP below you. You can't enter a trade there. Is there money to be made? Sure. I mean, you can make some bucks scalping 50-cent moves on SPY, a little less early in the day than you will later in the day, but I can watch this and I sit and I watch this and I don't care about this. I look at the chart and, this is how I control my trading psychology, which helps me have, less stress, typically a higher success rate. What I do is I start planning. And I say, okay, market has been strong. You got to be blind to not see that. So I'm in dip buy mode. I got my puts on. They're torched, but they're there. They're protecting me if I'm wrong. So I'm in dip buy mode. Well, these first candles of the day, I got a couple plants. I'm getting long down here. We don't need to talk about the technical, a bunch of the technical aspect of it, but I'm getting long down here because I'm going to buy the dip to the EMAs. I'm going to buy the dip at this level, and I know my stop is right below me. If I want the wide stop, if I'm trading, next week's, not same days, anything like that, then obviously my stop is this next level down here below me. So ideal world, I got 20, 30 cents a risk. I'd probably run it down to here, 40, 50 cents a risk. Worst case scenario, I got about $1 risk. Well, that's great. I now know how much I can lose. If you understand an option contract, you can look at your option contract. You can say, I got 40 delta. I got a $1 stop. I'm losing $40 if the stock drops down to here. So your risk is now defined. And that is complete, the fear of going red, the fear of any of that is removed because you know how much you can lose. Well, the other trade I'm looking for is a break of this level. This is the level above us. We're in bull market. We're in bull mode. If we dip to support, we buy calls. If we break resistance, we buy calls on the pullback. So I know where I want to enter from this candle and this candle and this candle. And I'm not buying the first break of it. This candle is a wonderful example of why you let candles close. You know, and that's part of trading psychology. That should be, I think, a lot of the time that should be people's rules. Of course, there's times to buy, you know, mid candle on EMAs or whatever, but if you wait for candle closes and retests, your success rate will skyrocket. So we finally get a close above it. I've been watching this thing for 25 minutes, so I'm prepared for the close above it. I'm buying calls on that close above it, and I know if I buy calls on the close above it, my stop's down here. I got 30 cents of risk on the trade. That's all that matters to me. Then my ultimate target is up here. So that's, I don't buy calls anywhere else. And that is the best thing that you can do um, to control your emotions, you know, is know your entry, know your stop out, know your target. If you know all of those before you enter the trade, then there's nowhere to feel FOMO. There's nowhere to feel like it's necessary to chase, you know? If your entry is 593.61, you enter at 593.61 as close as you possibly can. Maybe it's 563.70. Maybe it's 563.55. All you know is this is your entry. Can you buy these pullbacks to the 9 EMA? Sure, but I don't, because that's not, you know, for my trading psychology, that doesn't help, you know, because I've seen too many EMAs break down, and I've seen too many EMAs, you know, act as resistance that was support. You know, I've seen them not work too much. So I use my level, and then I'll start to use EMA as the stop out or things like that. You know, if we're still pushing up, well, I bumped my stop up. My trading psychology tells me I'm green, I ain't going red. So I start to just trail it up, you know, and ride that 9 EMA. And then ultimately you come to your target and you're out. So for me, this removes all FOMO, all chasing. You know, nowhere in my plan did I say I will add to this trade. And my plan is made before I enter the trade. Once I'm in the trade, I ride it, no questions asked. I stop where I'm supposed to stop and I take profit where I'm supposed to take profit. No in between. And that controls you from, you know, being the person who maybe shorts it up here after a couple red candles and says, we're going to low a day. You don't want to be that person given the wild price targets. Everybody will laugh at you. Keep it realistic. Even this one, you know, you're in at 593.61, 595, that's too wide of a target. You need to be trimming in here. So my rule of thumb, great way to help you, you know, trail any trade. If you're moving your stop loss, trim a contract. So just as a little example, you know, we enter our calls here, you know, this is hindsight trading, so we get to look like we know what we're doing. We got to just ignore that side of it. Well, we get a nice pop up. I probably trim some contracts here. Well, my stop is now above break even. Like this is an overall green trade. I'm not letting it go red. Well, maybe we get another little pop up. I'm going to bump my stop up again, and I'm going to trim some contracts. Then as we push up to my level, again, I'm trimming some contracts and I'm bumping the stop up. And you can see, sure, you get stopped out and it runs more, but you caught most of the trade by just trading the chart and not your feelings. Oh, I got a couple messages. Oh yeah, Trading in the Zone by Mark Douglas. Great book. People love it. Like I said, trading psychology books not really for me, but of course that's the, you know, you gotta recommend that one as far as books. And Norberto, I didn't even take this trade. This is just merely an example discussing trading psychology and how we can control, you know, maybe you're a bear. This controls your bias. This controls your FOMO. This controls you chasing. I am buying this because obviously market is bullish. All names are pushing. We have an important resistance level here. When we break resistance, it becomes support. You buy the pullback. You know, this is just a trade where it worked good. Again, this is hindsight trading. You got to pretend like you're the greatest trader ever. And in the moment, it can be hard to do. But these are the main things I see people struggle with is they chase an entry, you know, maybe this was their entry, but then they buy calls here. Well, the next candle really doesn't do anything. The next candle, you know, gives you a 20-cent pop. So you make a few bucks, but not really. Then you go red, and then you go red, and then maybe you go a little green. Then you go red, green, red, green, red, green, red. You don't want to take entries like that. You want to take this entry. And it controls all FOMO. It controls all chasing. When your entry is your entry, you don't vary from it. And trading the chart is the best thing you can do for trading psychology, because then all your opinions are removed. All of your FOMO is removed. I mean, don't get me wrong. If you were in calls here and you stop out here, and then later in the day you see the market's, a buck 50 higher or whatever it is, sure, there's some FOMO, but we as traders want to look for a new entry. If you take this trade and then you take another trade and enter over here, you will 100%, I guarantee you, made more money than the person who held all day and eventually caught that final pop, because all of this, they're losing value. And if you sit out all of this and catch this move, well, then you've removed the stress of, oh, we broke this level. Oh, we broke back below this level. Do I stop out? What do I do? You wait for the good entry, and that's how you control FOMOs. Yeah, these are Fibonacci's. So they're a good one. I mean, when you're at all-time highs, they're a good tool to have. Berto's on a tear tonight. But yeah, I mean, I agree with what Ninja says for sure. Okay, so does everybody see what I'm saying? Does everybody see how to control FOMO by using the charts? This is the part that I want to talk about, and this is the part I really want to, show you of, cut your losers quick, let your winners run, do it based on the chart. Don't have FOMO. Don't feel like you're chasing, if you feel like you're chasing, you are. Don't take the trade. Don't ever let your bias get in the way. We see it all the time. People will short the strongest things and then go on trade floor and be like, what, oh, this company's terrible, like, why is it going up? Well, it doesn't matter why. If the chart is going up, you don't want to be short. If the chart is going down, you don't want to be long. Ignore your biases, ignore all your, remove all stress, and your trading psychology will go absolutely through the roof. I drew those fibs. To be honest, who even knows? Oh, it looks like I got some extensions riding on here, and oh yeah, so I drew the extensions just off of yesterday's move, the high to lows. I set the midpoint somewhere right about middle of the day. So it was looking, ultimately that is the 100% bounce that we got. And so again, we're super overextended. 599, obviously almost 600. Market loves to not quite get there, but that's obviously the next point you're watching. And I think all eyes are on 600 here sooner than later. Market might whip us back. And then these ones over here, these are actually drawn off of this whole move. So I drew a fib retrace after the election night move. And so this was actually a short that we did catch. Nice short on it. Another actually, I'm happy that you asked about those fibs because I wanted to use this example. So election night, rip of a lifetime, obviously, uh, so, uh, so so Norvin, I'm not going to say that's wrong. I actually do that on occasion as well. But this one I wanted a midpoint. That's technically how you're supposed to draw an extension. Okay. So this is a very, very prime example of trading psychology and the market not doing what you would personally expect it to do. So or you would hope it would do. So obviously big rip. And we saw it in trade floor, obviously the swingers were celebrating as they should have been, move of a lifetime. You won't catch those many times in your life. And everybody was going to pile in long. I mean, and I was begging people. We are not like, even I was doing voice chat that following morning, and I was full on begging people. We're short. We're short off the open. I was saying it before the market even opened. We're short off the open. No questions asked. And we knew where our stops were going to be above this 590.71. So that's what we actually did right off the open. And we don't realize it because of how big these candles were. The calls off the open, people, this is a $4 drop, give or take. So the calls off the open, people, were absolutely obliterated. Did the market ultimately end up closing higher than where it was? Yes, but they were absolutely obliterated. And a lot of them held, and made money eventually. Horrible trading psychology. This was a day where everybody expected a rip. They got blown out. By the time they were finally ready to rip it, most people were finally starting to switch short in their mind because the market wasn't continuing to push. It was even technically setting lower highs. Ultimately, this breakout paid really nice. We got that one in Pro too. But this was a nice short off the open. Well, last night, we again, nice move up into the open. We're up a couple of bucks. People are very, very tentative. They don't want to, they rushed into longs yesterday. They aren't going to get sucked into the longs again. Well, ultimately, the market just opens and pushes for that first bit of the day. It was FOMC day. So this is the day we just talked about where we didn't rush in, but this day gave us confirmation to get long. And a bunch of people didn't catch the longs because they were expecting similar to movement to yesterday, which we didn't quite get. And so just a really like the yesterday and today opens, very, very prime examples of controlling your trading psychology and trading what the chart is telling you. Yesterday we couldn't break over resistance and kept rejecting. So even if you weren't short biased like I was off the open, there was reason within that first 10, 15 minutes to start to be looking short. Well, this morning is the complete opposite. We weren't breaking below support. So we were looking for a push up this morning. So, you always have to be careful having a bias because yesterday could have gone the exact opposite for us and we could have got blown out on our shorts, but they worked for us. Today was the complete opposite open of yesterday, and I didn't really have a bias going into the day with it being FOMC day, so you just have to trade the chart. So that's it for me. We got a few more minutes for questions. I mean, we got as many more minutes as you all need. So yeah, and then again, just to go back, that fib's not automatically placed. I place those. And then generally, I'm not a huge fib trader. I know a lot of people are trying to use them intraday now. I do not use them intraday. That's not how I like to trade. I won't say they don't work. Every once in a while, if we break the opening range, I'll slap the extension on the outside of the opening range. But or even, the retrace on the opening range. But that's about it for me. I don't do it too often. I want big moves. We had like this is the move that I did for the retrace, and all the retrace we got was to the 23.6. Don't get me wrong, this was such a big move that I mean, in reality, that's a $7 pullback, $6 pullback off of these highs. So it's a big move, but that's all the pullback we got. Then when we start to break out, I did the same thing. I did the highs from the high to the low of yesterday. I like to set that midpoint kind of somewhere around the opening price if I'm doing it this way, and then trade these levels going into today. And so that's ultimately what I did. Juan, really great question, but I think so. We've been getting, thankfully, I think it's awesome. I love new people in here. We've been getting a ton of new members. I haven't done my beginner series in almost a year now. So we are going to start really I think we're going to start my beginner series again. It's like 9 classes long. It covers basically exactly how I like to trade. Obviously, I could get a lot more in depth than I do, but it covers everything that I do to chart a chart from blank to able to trade it come the trading day. I talk indicators, I talk everything. So coming soon, we are going to be doing all of those live again. Norb, I don't trade like that. Just because we ripped today doesn't mean I expect us to pull back tomorrow. One thing that I will point out, and we can talk about this because I've done a class on B bands. So long time frame B bands. In my opinion, going into tomorrow, we have a very important level at about this 513.30. And then if we look at the daily, we technically closed outside of this third B band. We can see again, big level. So there's like a 99% probability that you don't close outside of this, and we did. So I do think we have some pullback coming, but I am for sure not going to just be diving in puts because of it. Jadon, I got it pinned in my tab. It's labeled Assassin Buy versus Sell Volume. And never feel like you're interrupting. You're good. Right on, fitness. I appreciate that. I know you're always there. Well, the beginner lives, I mean, like in so that I might end up doing a couple of premium voice chat days. I'm hoping so. I love it. I love all voice chat stuff, and it's been really fun in pro. We've been doing really good in there. Uh we've been doing really good. And so, of course, I'm 5 days a week in pro, as I said, but I believe I'm going to start doing a couple of days a week in premium. And I won't say they're beginner, we are scalping SPY frequently, but they're pretty doable trades for most people. And even, I try to be aware of, if they go too fast, then I don't talk about them. I don't want people FOMOing into it or anything. But we've been on a rip in pro for sure. Mm, do I use the tape for my trades? Not a ton, just because. And how I use it when I'm in a trade. I was actually using it just as I have an example from today. So I was trading PLTR and I was long PLTR around here. I was reading the tape because this 54.88 is a big level. And so I had that level two pulled up to see if those orders were getting eaten up because I had got long, I don't remember, somewhere down here or something like that. So I had gotten long. This was the level I wanted it to break. And so I was strictly using it to see if we were going to be able to get over that level. And once you see those orders disappear, then you can, obviously they get filled. I don't love time and sales. I like level two more than time and sales. And level two is orders waiting to be filled. Level or time and sales is orders that have been filled. So I like level two because it says this is what is in the way of the stock going where you want it to go. Unfortunately, when we got the pop to this previous high on this candle, I was all out of the trade and then it proceeded to moon. But it was, that's how I use level two personally. Yes, so we do have a lot of classes, but again, I'll be doing my beginner series again. And if you can't wait for it, the last one I did is pinned in my tab as like a YouTube playlist in there. A buddy made it for me. So they are in there if you want to watch them. And then, yep, Zoom will be recorded. I see some people leaving. I just want to, if you got to get out of here, thank you everybody for being here. If you're new, happy to have you. Um, Old members, of course, happy to have you too. But just so everybody knows, my DM's always open. If you ever have a question or anything, always feel free to reach out. Yeah, how much weight does the third band have? A lot. There is times where you can really just ride the bands up, but look at the clothes that we have here, and we haven't like generally when you get these wild overextensions, you're going to see a pretty volatile move shortly after that. I'm not trying to say we're going to crater or anything, but because we might put in one more day pushing up, we might continue to go set new highs and we might have one more day of us pushing up. I'm not going to say we won't, but I am cautious long now, especially after the last 2 days. Yeah, thank you, Christina. I appreciate it. So if you click on my tab, uh, River, I think it's just River in there, and then you'll see like a little safety pin or push pin looking thing. Click on that and you'll see it in there. Well, so we are in this interesting situation where a lot of things are outside of their third band. Oh, yeah. So that one is blown out. I mean, yeah, that one is blown out. I mean, statistically, you got to expect retrace, but also you kind of want to be looking for that gap fill. I assume that's what you're looking for. But you want to look for a retrace. That doesn't mean the market's reversing or anything like that. It's just a pullback, But statistically, we see a pullback pretty soon. Yep, I'm Dirty River. I'm Dirty River. Yeah, and if anybody ever has any questions, feel free to shoot me that DM, and I'm happy to answer them. Yeah, man, have a good night. Oh my God, Alberto is off the bean. Okay, well, if that is gonna do it, everybody, I don't know. Let's see. Let me get in my tab and let me see where it is. So I just tagged it in my tab so that if you go back to that message that I tagged, you'll be able to find it. Right on. I love to hear that. Thank you so much. Thank you so much. I appreciate it. Okay, well, if that is going to do it, thank you so much, everyone. Have a great rest of your night. We'll see you tomorrow, Friday. Trade safe. As always, any questions, let me know. And if not, we will talk tomorrow. Have a good night.